Hello, chart watchers, and welcome to this Monday, February 25th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, it's more of the same. We got the Dow Jones Industrial Average up 185 points, the S&P 500 up 17, the NASDAQ up another 64 points, and the Russell 2000 knocking on the 1600 door up nearly 10 points today. 10-year Treasury yield up nearly 3 basis points, 2.69%, actually 2.68%, but right there at that 20-day moving average where we have seen a lot of difficulty trying to break through. Volatility index continues to move lower, has been for the past couple of months. It is up slightly today, but it remains in this downtrend, currently at 13.81. Financials leading to the upside today, enjoying a little bit of a pop in the 10-year Treasury yield. Financials up more than 1.33%. Technology also having another strong day, following up on another breakout it saw on Friday. Semiconductors having a really strong day. Look through the list of semiconductors, and just about every semiconductor on the list was higher today. And you can see that that is a really nice move up today, up 51 points, or roughly 1.5%. GE and Danaher in the news this morning. We did have an announcement that GE would sell its biopharma biz to Danaher for $21.4 billion. And the market is saying it's a win-win. GE gaps up and is currently up 9%. And you can see Danaher also having a very strong day. Danaher, if you recall, was a stock that we talked about as a breakout back on Friday. And after the breakout, now you can see the fundamental news coming. They're getting GE's biopharma business for $21.4 billion. Also last week when we had Julius on, we talked about some of the technology stocks, and we did a break it down segment. One of the stocks featured was AMD, Advanced Micro Devices, talking about the building momentum in that stock. And you can see today, one of the top performers in the S&P 500, AMD, off of its earlier highs, but still up 3.04% today. Erin, how was your weekend?
It was a great weekend. It was a little cold, but actually yesterday we got up to 67 degrees. So we were all thinking it was so warm because we've been in the 50s for our highs, and that just doesn't happen here in Southern California. Not for like 2 weeks straight. Definitely not.
Well, they say it never rains in Southern California, but apparently it snows.
Yes, and actually the rain is unbelievable. I think in 1 week we had I read somewhere 1 trillion gallons had fallen in all of California for about a week in February. It was crazy.
Wow. Okay, well, I think we got 3 trillion here in South Carolina because it is, I want to come back as a duck in my next life. It has been raining so much. We actually got the sun come out yesterday afternoon. It got up to 70 degrees. It was beautiful. I went down for a walk along the Catawba River, which is pretty close to me. And I mean, I've never seen the river up so high, and it was so wild because of all the rain we've had. And I looked at the advanced forecast, and we're supposed to get 5 more days of rain, I think, starting on, I think it's later tomorrow or maybe into Wednesday, but 5 days of rain. And then at the end of that, they're going to throw in a little snow just for a little,
it looks like our weather did move east, and you're getting it now. So
yeah, enjoy. Thanks so much for that. All right, what do we got going today?
All right, upcoming schedule. My workshop is going to be tomorrow. I'm calling it Relatively Speaking because I will talk a little bit about price relative and how to do performance charts, that sort of thing. Tim Ord, fellow market timer, will be here on Wednesday as our guest. And then Tom will be doing a March seasonality report on Thursday. So excellent week ahead. As for today, we will be starting off after the technical news with our Monday setups. We'll see how we did last week and give you our picks for this week, earnings spotlight. And then our 10 and 10 first symbol is going to be Beacon Roofing. BECN, if you want to go take a look at that chart. And finally, we will finish up with the sentiment update. I'll let you know what's going on as far as sentiment polls and money flows. So stick around for that as well. Okay, Tom, technical news and headlines. Let's get it started.
All right, let's go over first the economic news. There wasn't a whole lot out this morning. December wholesale inventories came in better than expected, rose 1.1% versus 0.3%. And when we take a look at what transpired in the bond market, well, we did see a little bit of a jump, on Friday. We had seen the 10-year Treasury yield drop 3 basis points. Today, we're getting them right back again. We're back up at 2.68%. And the 20-day moving average sitting at 2.68%. I'm starting to sound like a broken record here. But the 10-year Treasury yield, you can see it. It just continues to struggle to get through that level. The good news for the bulls, equity bulls, is that the market's continuing to go higher without really money rotating from the Treasury market. So if at some point those in the Treasuries decide they want to get out and be a little bit more aggressive and move some of that money into equities, it would certainly help to fuel what has already been a very strong start to 2019. Let's go in and take a look at some of the earnings news out today. And most of these companies are smaller that reported today. I'd say they were all in like the $2.5 billion to $5 billion market cap range. And you can see for the most part, pretty good numbers. The 4 companies listed there all did beat. After the bell today, mostly second to third tier type companies will be reporting. So a lot of the big companies have reported now. They're behind us. We'll have a couple that'll kind of come in from time to time, but most of the Dow and the S&P 500, many of those companies have reported now. So things will begin to slow down on the earnings front. Let's take a look at some of the companies that did report, though, and then we'll take a look at some that will be reporting after the bell today and maybe take a few guesses as to what we might see going forward. First up, let's take a look at Carter Holdings. Nice move up here. We broke this downtrend, I would say, about a week and a half ago, probably on this candle right here. Looks like if we drew a trend line, that would be the breakout. So we were starting to see a little bit of strength in the stock, and then the earnings came out, and we did beat on both top and bottom line. So Carter Holdings posted revenues $1.09 billion, market expecting $1.07 billion. Easy beat on the bottom line, more than a 10% beat from $2.84 versus $2.56. Their guidance was interesting, though. They guided quarter one revenues and earnings per share lower. They also guided their fiscal year 19 revenues lower, but they actually raised guidance on their fiscal year 19 earnings per share. And it looks like traders, because maybe so much bad news was already built in, I think traders may be zeroing in on the fact that the earnings for fiscal year 19 are expected to be higher. Volume very strong on the stock, and we did get that big gap up. So we did have the earnings beat, and we did raise guidance for fiscal year 19 earnings. And again, that seems to be what traders are focusing on most there. Terex Corp, TEX, pretty good numbers here too. Beat on the top line, beat on the bottom line, had a nice run going into earnings, gapped up. And this isn't unusual for a stock to gap up with its solid earnings and then pull back, fill the gap. I would think maybe we might see some more strength in this stock for the end of the day. We'll have to see. If we close back down below about 35 3/4, then I think there's a chance we're going to go back maybe to that 20-day moving average. But if we do turn higher, then I think probably the selling that we've seen so far today may be it for the near term. In addition to beating on the top and bottom line, they also guided their fiscal year 19 earnings per share higher. DORM, this is Dorman Products. They beat top line, beat bottom line, guided their fiscal year 19 revenues higher, but they guided their fiscal year 19 earnings per share lower. So a little bit of a mixed picture going forward. You can see a lot of volatility in the stock after gapping up slightly at the open. Looked like we were going to make a run for that 95 high that was established back in January. We got as high as 94 and then reversed. And now we're all the way down testing the lows from early February and really going back to test these earlier lows back in November and December. So DORM, I think, is just range bound for now, but not bad report, actually. PLAN. This is Anaplan. You can see that the company came out, went public back in October, so we don't have a whole lot of history here, but they crushed revenue estimates and they easily beat the earnings estimates, although they did post a loss, 13 cents, but the market was expecting 18 cents. They guided quarter one revenues higher and fiscal year 20 revenues higher. So a lot of good news in the stock. Unfortunately, there's just not a lot of history with the company. I would say with this gap up, 33, 34 would be great support on the way back. But again, without a whole lot of history and knowing where prior tops were, that sort of thing, it's a little bit more difficult. Another piece of good news, though, for the company, it is part of the software space. And while the software stock has been going up, you can see that Anaplan actually has been going up faster than the group. So the probably the biggest downside when you get into a company like this that's very small, their revenues in the last quarter were only 69 million. So if we just said 70 million in revenues and multiplied that times 4 quarters, that would be on a pace for about 280 million in revenues. Their market cap is almost 5 billion. So this is a company that's trading probably at about 17 times their revenues, obviously, and they have losses. So while the company looks good and they're raising guidance and everything looks peachy, this is the type of company that if they ever come out and warn, could get absolutely slammed to the downside, because there's really not a lot of, I don't know what you want to call it, but it's just built on growth. The valuation is built on a lot of growth. So you want to be careful in a company like this in the event that they do issue downside guidance somewhere down the road. All right, let's take a look at some of the companies that will be reporting tonight. This is a pipeline. I can never remember how to pronounce this, so I'm not going to try. I'll just go with the ticker symbol, OKE. Nice move up here, challenging the July and August highs, but you can see the overall group has been very strong of late. Pipelines, this is probably the best area, or certainly one of the best areas within the energy space. And I would say OKE has been one of the top performers within this space. So I think that they're going to have a pretty decent report. I'd be surprised if they didn't. Nice volume trends of late, too, bidding the shares higher. Mosaic, MOS. This one's a little iffy to me. Now, the group has been strong of late, but on a relative basis, Mosaic's been drifting lower for the last 3 months. So even though the group has been doing pretty well here on a relative basis to the S&P 500, Mosaic's just kind of, I don't know, even been maybe a slight underperformer versus the S&P. So I just wonder maybe if that's a little hint that we should lower our expectations on the stock going into earnings. ATH, this is another one I think questionable. Nice rally here, but again, it's well off its earlier high back in September. And when you look at the group and you look at the stock, here's its peer group relative to the S&P. Here's the stock relative to the S&P. It's telling us we probably should be a little worried about what numbers might come out here. Allison Transmissions, ALSN. This one looks okay to me. I would expect a pretty decent report here. Nice rally. The group has rallied, breaking above recent highs. It's trading at about a 4-month high in the group. And overall, you can see most of these charts are going up from left to right. So I would expect a pretty decent report. And the last one I have is Etsy. Unfortunately, Etsy is just in a group that has struggled. If you look at the DJUSCS relative to the S&P 500, it was fine until in November. And then November, we started seeing all that relative weakness. But the stock overall, even though the group was weak, continued to perform pretty well relative to the S&P 500. And you can see clearly it's one of the top stocks among its peers. I think it's a good-looking company. Back when it was making all of its move to the upside, you can see that the group itself was outperforming the S&P. So that money coming into the group as a whole was helping to fuel Etsy to the upside. But if you look recently, you know, throughout this huge move we had in the S&P in 2019, Etsy really had not been going along with it much until just these last couple of days. So I think it should be a good report. I'm just a little concerned about the group as a whole. All right. And with that, Erin, I'm going to turn it back to you for upgrades and downgrades.
All right, let's go ahead and look at a few of these. Some interesting ones today. All right, we're going to start with some upgrades. Brunswick Corp was upgraded today, and it looks like investors are pretty happy about that. Really nice breakout right now. I like how the PMO had its bull kiss. It came down, faked out a lot of those bears, got them out. Now we're taking off to the upside. I definitely like the breakout. I would just be a little concerned here about this $55 level, because it was a stopping point back at the end of 2018. So I think you could do a little better there, but keep it on a watch list. I think this one might get interesting here. You did get the 20-50-day EMA positive crossover for an intermediate term trend model buy. And let's look at another one here. Core Laboratories was also upgraded today. We have a PMO that is continuing to try and turn over. But I would have to say I'm seeing a little bit of a reverse divergence here. You have declining tops for the price, but you have rising tops for the PMO. Excuse me. I think that's pretty interesting, and I would look at that. It is a reverse divergence, so there's a little concern in that, the PMO, the momentum has been moving to the upside, but we're really not getting any breakouts here. But I think if we can get this PMO to turn around, this one might be another interesting one for the watch list. But right now, notice its scooter is kind of down to zero here. I suspect I'm pretty bullish on the oil equipment and services. So I would probably look for something a little bit better in that space than Core Labs. Ironwood Pharmaceuticals was also upgraded today. And as you can see, it's been on a pretty nice run, but the PMO is trying to turn over. It did the same when we had this consolidation zone that we had gotten earlier in February. But it looks like right now, and let's go ahead and annotate here. I think we do have a rising trend channel here. This is the best way to test that out. There we go. So I've got that in there. I'm going to make that darker so we can all see it. And then if you just click on it and then hold down your, I think, control key, or it's the Apple key, we come up here. All right, so it looks like it was a rising trend channel, but twice here we can see that price didn't quite get up to test it. That didn't seem to be a problem after this consolidation. But if I take this down and start connecting these tops now, we have a rising wedge. And so you should expect a decline or a breakdown from that pattern. And I think the PMO is confirming just that. So even though this one was upgraded, I personally would be staying away from it. All right, let's look at just a few downgrades here. Eversource Energy was downgraded today, and I have to say I do agree with this one. Utilities have had a really good run, but it looks like the electricity industry maybe is not as healthy now. You do have a PMO sell signal that is just coming in. It looks like today it should go final at the close unless price recuperates a little bit more. But you can see it's not only dropped below the 5-day EMA by a lot. Now we're seeing a penetration of that 20-day EMA, which we do not want to see. And then again, combined with a topping PMO, and notice these tops are declining and these tops are on the rise. That's a negative divergence. I would be expecting to see Eversource Energy moving even lower. All right, KB Homes is another one that we had as a downgrade today. This one's kind of overbought, I have to say, but it still looks healthy. I would have to, let's look and see what the PMO range is on this one. And the best way to do that is to lengthen the amount of time. And I'm going to take it to 7 years. And then we can look where the PMO oscillates and whether we really are looking at an overbought PMO. So I'm going to take this to annotate. We're going to use the rectangle, and we'll make it pink. So let's see, where is that normal range? I'm looking at it as being about 5, probably 5.5 to negative 5.5, which means with a 4.18 reading, we're not that overbought. We could certainly see price move higher here. So let's go back. And there we go. So we're not quite to the top of the range, so we're not exactly overbought. And you can see this was a critical level here. First critical level was back here at about 21.5, but now you can see that $23 level is pretty important, and we did get the breakout from that. So I would start looking for a move probably up to that $26 level to challenge the tops that we saw back here in September. I mean, we've got the breakout above the 200-day EMA, so I think this one's looking pretty good. And finally, the last one, PayPal Holdings. And you can see this one was downgraded. it doesn't look like anybody's too concerned about it. However, I would be watching this, though I'm not a candlestick person. This does look like a shooting star that's starting to set itself up at a top, at a breakout here point. So I don't like that setup. PMO is kind of overbought as well. We can see it's maintained an overbought position for a while, though, so we could maybe see it move higher. But I would be looking at a rising wedge here and look for a breakdown. I think this one looks fairly good, PayPal, but it is downgraded and it's looking pretty overbought. So that's it for the upgrades and downgrades. Here is the listing of what we did have. There are some other ones that I did not go over, some upgrades, Danaher and Matson, HSBC. Kraft Heinz was downgraded today. I know that that one took a huge dive here. I think Warren Buffett mentioned that, I can't remember who purchased it, but somebody said that Warren Buffett paid too much for Kraft. So I think that was part of the problem here. I don't know. Anyway, let's go ahead and move on to those Monday setups.
Yeah, I think actually Buffett did come out and say he overpaid through Berkshire Hathaway. He overpaid.
There you go.
But that's kind of a no-brainer at this point after the stock took the tumble that
right.
Friday.
Yeah, a little late for that news.
Yeah, all the ones I lose on, I overpaid for too, by the way. Breaking news.
All right. Well, here we go. There is last week's. I'll go ahead and take the screen so we can take a peek at how we did. I have no idea. I did not follow this one. I'm hoping it didn't do much. It didn't lose too much, but let's see. Let's go ahead and look at MTLS, which was my pick last week. You can see why I picked it. I mean, we had the PMO buy signal. Things are looking pretty good here, but it looks like we're consolidating. We might be setting up a symmetrical triangle here, so we could still see a continuation of this move to the upside. I do like that PMO buy signal, so I think this one still looks pretty good. I mean, I don't know that I'll continue it as this week's Monday setup, although I have to say I didn't have a whole lot of choices this week as far as I was concerned. All right, what do we have for yours here? Let's see.
It was T-Mobile, TMUS.
Yes. And you're so quiet, so you must have done well.
No, I did. It was up 1%. I mean, I love that breakout that it made above all those tops going back last 4 or 5 months. I love to see a stock that bases like that and then makes a breakout. It's more palatable entering a stock like that on a breakout than it is trying to enter a stock that's been up for 40 days in a row and nowhere near support level.
Right.
So, and I do like the group. I think this is a group, the mobile telecom group, which had been outperforming throughout a lot of 2018 and struggled more recently over the past couple of months. Hasn't really participated as much as you can see until the last week. T-Mobile really hadn't gone up much over the prior 5-6 weeks, something like that. But I do think the group is poised. I actually wrote about in my blog this morning that the mobile telecommunications index broke out of a triangle to the upside. So I think that's going to help lift this stock as we go forward. But back to the downside, if T-Mobile were to drop back into that 70-71 area, close to where those prior tops were, I think that would be a reasonable entry point.
Yeah, could be a really good pickup then. All right, but as we always say, we're only as good as our most recent picks. And let's see. So I really did struggle this week. I'll be perfectly honest. I think I even have the candle glance still up here. I had to really broaden my search to find things that even would hit on my scans. And this was the listing I got, and really, I just didn't care for too many of these, but I did find a few. So we'll go ahead and start with the first one, which ASND. And this is fairly low volume, guys, just FYI. And I'm going to take you here to the annotation tool there. All right. Well, we need to be able to see it. That's not very good. Okay. So what I am actually looking at here, and I think it's a little bit of That's not a stretch, but I think you could make a case for an Eve Adam double bottom, and we're getting the breakout above the neckline. I think I'm really stretching it here, guys. But I do think that you could go with that and look for a move to the upside, that will give us that breakout above the tops that we had back here in October. I'm going to just take this down. It's not very clear right now. There we go. I'll still fill up the screen. All right. So, I think the breakout looks fairly good. You've got a PMO that is on the rise. It hasn't had the buy signal just yet, but it is a low volume stock, but it had a decent setup, I guess you could say. The next one I think I picked was, yes, AYX. And I did look at the whole list. It just is interesting that all of them ended up alphabetically near the top. All right, so this one I thought looked really quite good as far as what we're seeing. And the fact that we're just now starting to see that PMO turn to the upside, and we just got that breakout, just like you were saying, Tom. We've been on a rise, but we got the breakout here. And so I think this one looks pretty good. Alteryx, AYX. Yeah, I mean, I like it mainly because of that breakout and the fact the PMO is looking good. And you do have a really strong scooter going on here. I would have liked to have seen the OBV moving upward on this rally to the upside, but I think this one's still a pretty good candidate. The other one that I liked, and I think it's going to be my pick, is Crocs. I think this one had the best setup of all of them for the shorter term. You got this break to the upside. It looked like it's forming in the thumbnail in the very short term a flag, and we're getting the breakout from that flag. It's about a $2 range here, a little bit, well, $2.25. So if you added that, that would give us a move to the $31 level. So I think we could end up testing $32 here. I mean, I would have liked to have seen something a little better than this as far as the PMO. It has been rather flat. But that little tiny breakout, I like that. And the PMO looks pretty healthy. You're staying above the 20-day EMA. So I think Crocs looks pretty good. But let's make sure. It's already up 1 3/4%. So that does put me behind a little on Monday setups if I pick that particular one. But all of these are having a pretty good day. All right, the emerging markets dividend ETF came up, and I thought this one looked interesting. The PMO looks a little better in the thumbnail. You can really see that bottom on it because it has been riding pretty flat during this rally. That can be a good thing because even though it's not going with it necessarily here, it's still started to turn up with it. And you do need to get it out of overbought territory. It was very overbought, and now that little pullback and consolidation managed to get it a little bit lower here, not quite so overbought. So I think that this spider looked pretty interesting. EDIV. And what was the other one? DE, deer was the other one. And I like this breakout. And I'm really starting to like industrials too, I have to say. I think these are starting to look a lot more healthy. When I did the RRG of the sectors, I thought this one looked pretty good. So I got the breakout here. The PMO has turned up. It's a little on the overbought side, which is why I think I was going to not pick it. So I think the one I'm between Crocs and Alteryx. So let me look here. Volume's okay. Yeah, I think I'm going to go with Alteryx, ALTERYX, AYX at 74.22.
All right. Well, it's in a good space, that's for sure. I actually like Crocs as well. I think that that's also in a good space and starting to turn up again.
Mm-hmm.
All right, let's take a look. I'm going to go. I'll start with my pick for this week, and I've kind of gone back and forth, but I'm going to stick with Advanced Micro Devices, AMD. Talked about this one earlier in the show.
I actually looked at this one too.
And I liked it last week when we were looking at technology. We were doing the break it down segment with Julius. And really, I was just kind of waiting for the breakout. We gapped up today above that resistance area. I think this could make a run this week based on this early gap up. It is off the earlier high, currently trading at 24.89. It still is up over 2% today, but I'm going to go ahead and go with it at 24.89. So AMD, I think, looks good to me. The semiconductors have started to roll. And on a relative basis, it was slow at first, but it's starting to pick up speed where semiconductors are outperforming the S&P 500. When I look back at what AMD was able to do from April through September of last year, while the overall group was really not very good versus the S&P 500, I think AMD clearly was showing its leadership, consolidated for a while, which certainly was entitled to after going from 10 to 35. But now it seems like it's starting to pick back up again. I love those two candles right there with the big volume, taking out that prior high, moving back down to test or get close to that rising 20-day moving average, and now breaking back out again to the upside. So I'm going to go with AMD, 24.89. We'll see where it is in a week or so, but I really like it further down the road. I think this one has a shot, pretty decent chance to go back up to that 33, 34 area and test those September highs. Let's see. The other ones, I'm going to go with Save, which is Spirit Airlines. This has been one of the best, if not the best, airline stock in terms of performance. I know customer satisfaction reviews they get sometimes aren't that great. I know that they charge you for just about everything, including your seat cover and everything else. I think they have a lot of individual charges, which drives a lot of customers crazy. But it's hard to argue with the chart. And the stock has been, moving higher, nice uptrend. I see rising lows here coming up, equal high at about 65. So I'm seeing a nice ascending triangle here. And off of the weakness last week, I think that this is an opportunity to maybe ride this through a breakout above $65. This is where you can see the strength relative to the airline group really has come in here in the last 4 or 5 months. And you can see that has enabled the stock to really outperform the S&P 500, even though the airlines as a group just kind of up and down, kind of going nowhere versus the S&P. So this is one of the better stocks within the space. I think it's starting to strengthen off of that weakness that we saw middle of last week. So I think this one goes higher. The one I put in my blog this morning was actually, I think I did put Save, Spirit Airlines, but I also really like Southwest Airlines. Last week, they got a downgrade. The stock was getting hit, but it came down, and I had talked about this support level at around 53.75 or so, maybe even the intraday low, which went down around 53, as being a key support area on Southwest Airlines. We hit that on Friday, and today we're trying to reverse back off of it. There's going to be a big test at the bottom of this gap down here at around $55. Notice that's about where the 20-day is as well. If Southwest can get back through that, I fully expect we're going to get back up to that 59 level. All right, just a couple more here. Let's take a look at PMT. This is PennyMac Mortgage Investment Trust. The stock gapped up with its earnings report last week, and it was a nice earnings, beat top and bottom line, broke out. Things look great. And this is my biggest nightmare when I trade stocks, is many times when stocks are performing well technically and they're really high in terms of price, they come out with secondary offerings. That's a great time to raise money when your stock is, at a all-time high or at a 52-week high. You don't have to give away as many shares in order to raise the money you want. So they came out with a secondary offering announcement, and that usually is very dilutive to the stock. So you can see it got hit here for several days, lost almost 10% of its stock price. And I think that was probably a little bit overdone. So I'm expecting that we're going to make another run back up here, maybe consolidate between this 1950 and 21.5 area. But this is one I think that's gotten beaten up. And I kind of share your sentiment, Erin. It's hard to pick some stocks today because so many have gone up so much that it's just it's difficult. You don't want to chase some of these that are just so far above support levels. So this was another one that I thought had gotten hit recently, starting to turn back up again. So I could see PMT doing well. And then the last one that I wanted to bring up is JB Hunt. This is one I actually bought on Friday, right at the 20-day moving average. It's sitting just about there now, hasn't really moved much. But it had been on, in a nice uptrend. It had pulled back. It is on my strong earnings chart list. So I think this was when the earnings came out and it gapped up, pulled back, went to new highs, and now is back down testing not only the 20-day moving average, but also the area of the breakout here at about 108.5 or so. So I think that you can keep a fairly tight stop on JB Hunt. Not really participating last couple of days. You might view that as a negative, but again, for me, it means I can keep my stop fairly tight. So this was the last one that I had. So we can pull up the summary, take a look at what we went over today, and then we'll jump into the earnings spotlight. So there you have it. AYX for Erin and AMD for me. Hey, we stuck with the A's.
Yes, we did. And honestly, I did. I looked at AMD earlier. I think it's one of the most active today. And I did a candle glance and I was like, this one looks interesting. But it didn't fit all of my requirements for the way I do my trading. So
yeah, and it was off the earlier high. I mean, if it does continue to weaken and closes, say, negative today, it could be some sort of a reversing candle after a false breakout, which could be a problem in the near term. But I'm kind of counting on the fact that it'll pick back up again this afternoon and not give us that reversing candle. We'll see. Anyway, I'll go with it. I'm going with it. I'm stuck with it now. All right, let's take a look at the earnings spotlight this week. I thought I'd do things just a little bit different. So what I'm going to do is start with some of the things that Julius talked about last week with Break It Down. We went over technology, and then the two prior times I had done a Break It Down segment looking at industrials and looking at consumer discretionary. So I thought what I would do is take all of that work and combine it with my strong earnings chart list to give you some individual stocks that I think could be poised based on the fact that they're in strong groups and that they have been, the groups have been performing pretty well on a relative basis. And of course, these stocks fundamentally have come up with some really nice earnings. So I am going to start by going through the industrials and looking at an RRG of the three industry group within industrials that I talked about a few weeks ago. You've got and this, by the way, is a weekly 1 year RRG, and I could drag this all the way back to the beginning of the year, and we could just kind of watch how these three groups rotate relative to the industrial group as a whole. But notice they, for the most part, just stay on the right side of the chart. And that's one thing that Julius always talks about when he comes on. Anytime you're on this half of the chart over here, and we can max this out. Yeah, there we go. Anytime you're on this side of the chart over here, it's telling you that you've got solid relative strength. This over here, the movement bottom to top, is just giving you a sense of momentum, relative momentum. But the right side is telling you which areas of the market have been strong. So these three groups have remained, for the most part, on this right-hand side since probably about May of last year. These have been three reliable groups in industrials. So what I wanted to do is start with each one of them and go through and pick. I'm going to bring up over on this. Let's go into the strong earnings chart list. Now, let me just pull a stock up and then I can get in. All right, so when I look at this relative rotation on the industrials, the first one that sticks out, well, this one here, this is the waste and disposal. So it's lost a lot of momentum, but it's still way over on the right side of the chart. We're still quite a bit away from moving into negative territory on a relative strength perspective, looking at the relative strength ratio. So when you start to see this weakness, a lot of times it can create some opportunities within this group, assuming, like they've been doing, that they're going to turn back around and move into the leading. Hopefully that makes sense. So when I looked at and I'm going to go ahead and show all of these in summary. This is a list that I actually do on my other computer and then send over. That's why you're going to see some of these charts, the style a little different than what we're used to, than what I normally show on here. But just for today, I think it'll be good to show you some of the stocks. So let's take a look at waste and disposal. So if I type in waste there into the search box, and I would highly recommend that you have a chart list that you keep track of, that organizes stocks that you're interested in maybe purchasing somewhere down the road. I do this. I keep this list constant. I'm always looking at what's moving higher, what's moving lower, which areas of the market are doing well. So I can come in, I can type it into this search box, and I can quickly see which companies have reported fundamental news that's awesome because we got better than expected. revenues and earnings per share. That's the only way they can get on this list. I also have to like the technical chart, or I wouldn't put it on this list. And now I've got the industry group. And so by just typing in waste there, you can see these are the two stocks that come up on my list that are in the waste and disposal services. Of course, that's waste management there. I'm going to focus in on WCN, which I think is Waste Connections. And if I pull this chart up, you can see that the stock recently, as it moved up to higher prices, lower, well, this is the MACD, but lower PPO, it did have that negative divergence, fell back, didn't get all the way to the 50-day, but it did go down and test this exact breakout level just below $81 before moving back up. Today it's weak. It's down almost 1%. I think down in the low 80s. I would say 80 to 81. Waste Connections would be a stock that I would certainly be interested in. All right, so that's in that waste and disposal services area. Now let's take a look at railroads. And you can see the railroads. I'll highlight the railroads here so that you can kind of see. Let's start at the beginning of the year. Look at that strength. Look at the relative strength of railroads back in the first half of 2018. And then they just kind of go through this weakening period, start to turn back up, kind of still hanging around, and now starting perhaps to turn back up into that leading group. So what do I have in terms of railroads? I think there was only one on my list. And that is UNP. So UNP, when I look at this chart, nice move up. Been going sideways here the last 4 or 5 days, so it's not really participating recently. Volume trends, I think, are still pretty good. And I would probably even move one of these lines up now because we've broken above this area at around 164. I think a pullback into that 164, 165 area near the 20-day moving average is something I would consider. All right, and then the final one in here is aerospace. And this is another one where if we just drag and we kind of follow for the year, see how it almost went negative into lagging and then comes right back up and now strengthening. Look at the length of that tail, and that's the other thing that Julius talks about a lot. It tells you the power behind the move to the upside. And DJUSAS, the aerospace group as a whole, has really been powering forward the last 5 weeks. So we'll go back over here, and again, let's take a look. What looks good in the aerospace? What stocks are on my list? Well, Boeing and TDG. Now, Boeing, we could pull up. It's been straight up. Once it made the breakout here, well, this is the gap up with earnings, and I put a support level in at the tail because after it gaps up, there was some selling down to about 378, and look at the volume that day. So that's where the selling ended and the buyers came in. That to me is a major support area. I could probably move this other support line up now to where we broke out from at about 390, and that would be a key area as well, going back down 380 to 390. But you can see Boeing is up now almost 430. So it's just one that's way overbought. I like the stock. I could own it. The problem is if I buy it here, where's my stop going to be? Below the 20-day moving average, which is all the way down at 402. So am I willing to give it 6% before it hits support? Because that's what I have to be willing to do in order to get into Boeing here. The other one on the list I like better, but even this one is also well above support, and that's TransDigm Group. The move up was phenomenal, very, very heavy volume. I think 430 actually gapped up 430, came back down to about 413, 414, and then broke back up through 430. I would say the 430 area will probably hold as support on the downside. So I actually like TDG a little bit better than Boeing just because I think I can manage my risk a little bit better on this one. And it's a smaller company, so I think maybe its upside might be a little bit better. Okay, so that was the first three groups in industrials. Let's take a look at consumer discretionary because these were the three I had mentioned in consumer discretionary. Now, if you look back, a year ago, restaurants were really struggling. They were lagging, but they came to life in a big way, right? Here, they were still struggling, and then boom, look at that move. Look at the size, the length of that tail. All of a sudden, as the stock was breaking out into that leading group. Now it is started to weaken. And by the way, you can kind of see specialty retailers had weakened. Look at specialty retailers coming back now. And there you go. So restaurants still well on the right side of this line. So we're still seeing a lot of relative strength, but we've been losing momentum recently in 2019, last 5 weeks especially. But that generally will present some opportunities, as we have seen with the other groups. They were weakening for a while, and then look at how they rebounded right back up into that leading area. That's what I expect we're going to see from restaurants as well. So sometimes, even though they're in the weakening area, this is an opportunity maybe to take a look at some of those stocks. So let's start with the restaurants area, and I'm going to pull up a few stocks. Rather than go through the other, I'm just going to go ahead and bring these up on this chart so we can use the current chart style. I like this chart style a little better. QSR, we are moving back down the last few days. This is probably one I could have maybe used as a Monday setup because we are testing the 20-day moving average. I think we've got some pretty good price support around 62 to 63, and we're at 62, 66. Look at the volume coming in on the gap up. Nice little flag, breakout above that. Now we're coming back down. I'd like to see it hold 62. Outside, worst case, I don't want to go back down below 60. But QSR, I think, looks like a pretty nice trade. CMG, I really like. It is just sideways consolidating right now, but it made a huge run up. Then with earnings, big gap to the upside. The stock was about 528 or something before earnings. After earnings, it was 600. So it's consolidating right now. I expect the stock to go higher in time. And then the last one, they just recently reported this past week, Dine Brands Global, DIN. Look at the volume coming in on this move up. And I love this sideways consolidation. A pullback to about 95, and I'll be a buyer of DIN. I like the stock. I like that support level around 95. We'll see. I'm hoping it gets back down there. All right, moving back over to that relative rotation graph, here is your specialty retailers. Now, when I went through my list, there was only one on the list, and that is Flowers, 1-800-Flowers. I own this one. It's been a really good performer, continues to move up. $17.92 today, but it is moving to a new high. So it is in a nice uptrend again to the upside, and kind of watching volume, but volume still seems to be okay. We're about the halfway point, so looks like it's probably going to do maybe 275,000, which will be fairly similar to what we saw most of last week. All right, footwear. Again, coming back here, here's that footwear. Now we're starting to weaken a little bit, but we're still in the leading quadrant. This is one of the reasons I said earlier I liked one of Erin's setups, Crocs, because it is in the footwear space, and this is a group that has been outperforming. So when you start to see a stock like Crocs or any of these footwear stocks begin to strengthen on their own individual chart, you already know that this is a group that is attracting a lot of money, more than their fair share of money relative to other areas of the sector and also versus the S&P 500. So when I look at the footwear space, the one I really like is Deck, and I think Deck was breaking out earlier today. This is Decker's Outdoor, DECK. Yeah, it is trying to make this breakout. So we had the double top at around 146 or so, 146 and change. Equal highs, rising lows. I think we're getting a breakout of an ascending triangle if it can hold. Now, if we leave that tail to the upside, come back down around 145, 146 on the close today, I'm not going to be nearly as bullish, but I do like this breakout today on Deckers. All right, the final one. This is what we went over last week with Julius, went over the technology group. And you can see computer services, which is DJUSDV, semiconductors, talked about that earlier, DJUSSC, and software. And software is the other one that has been just a monster. And you can see as we go through, it wasn't always great for computer services and semiconductors. They lagged for a while. But as I was showing on the chart recently, we're getting the strength from semiconductors. We're starting to see that relative strength, which I think is good. Software weakening, but still way on the right side. Taking a look at a few of the charts, individual stocks within this group. Start with computer services. And one of my favorites there is Ring Central, RNG. Big gap up with earnings, pulled back. Didn't quite fill the gap. Now starting to turn up. I think we're in consolidation mode here between 100 and 110. But I fully expect we'll see a breakout on RNG in time. INFY, I mentioned this as one of my setups last week. Came down here and tested this price support level and has really rebounded nicely back up near the recent high. 1040 to 1090 That's probably a 5% move in about 3 or 4 trading days as it consolidates sideways, but I think this is a nice performer. Let's see. Semiconductors. Again, talked about the semiconductor group. Whoops. Semiconductor group right here. And I'm using the benchmark, by the way, as the sector ETF. So the XLK is already outperforming the S&P 500. So if these groups are outperforming the XLK, you know that they are significantly outperforming the S&P 500. And so among the semis, some of the groups or some of the stocks I liked, actually the one main stock I like off of the list is Xilinx. I think this is a monster. Even despite the weakness that we saw in the fourth quarter with semiconductors, you can see Xilinx continued moving higher with earnings, huge move to the upside. This is confirming fundamentally and technically what we had been seeing with the rising price. Keeps going higher. One of my favorite stocks in the market over the next quarter. I think Xilinx looks great. And then finally, the software group. It is rotating down, but this group has been leading the market up now for 5 years and counting, and I don't see any slowing yet. The group is still moving higher on a relative basis to the S&P, so I like paying attention to the stocks in the group. I will give you a few here. A couple that have just gone up so much I can't really do anything with them at this point. Trade Desk, my gosh, what an awesome report they had last week, but the stock has gone up so much I'm going to be watching this. It's obviously on my list. I love Trade Desk. RPD, this one was sideways more for quite a while and has just recently broken out. I think RPD actually provides a much better reward to risk than some of the others on this list because of that sideways consolidation. We really didn't get a big breakout until we got the earnings here. And a move back down to test that 20-day would be awesome, I think, for RPD. Last two, Shop. Another one that went sideways for a while, broke out. And I'm going to stretch this chart out because I think if you look at this on a 1-year chart, look at all this consolidation. And just recently did we break out, and look at the test and holding of that 20-day moving average. I think Shop looks really good, Shopify. And then the last one, MIME. This also was a setup, I believe, last week. When it came back down, tested the top of gap support, and it is making a move to the upside. I love that volume coming in on the gap up. I think it's going to run to 52 and beyond in time. Great support. Still resides down around 47 and a quarter. All right, those were the stocks and kind of a little different twist on the earnings spotlight. These were all companies that beat top and bottom lines, but using the break it down segment and the areas of the market that really have been strengthening, showed you how you can use a chart list in that search box, put in the areas that are strong, and it will bring up the stocks in your list, which I think can really help your trading. Okay, Erin, I think it's time for the 10 and 10. You got an RRG?
I actually do. It's nice when you do the segment right before. I always have time to make sure I get it all together. All right, so here we go. Let me get this to where we can see it all. There we go. All right, so there is our RRG. You guys, lots of northeast directions and leading quadrants as well. Some interesting ones in here. I thought that what was interesting is that half of these requests are in the industrial and materials sectors. We generally don't see that. Usually it's all about consumer discretionary and technology, which technology is still up there. So anyway, go vote for which one you'd like to see, and I will get that as our next symbol. But for now, let's start off with Beacon Roofing.
All right, Beacon Roofing is improving. I'm not convinced. I wouldn't put my money in it just yet. But you can see it's got a nice little trend line here that's been holding over the past couple of months, which is good. You did gap up with big volumes. I think that was earnings related, but I'd have to go back and check. But it did. If it is, it gapped up with earnings, pulled back, held the trend line, and now coming back up. What I want to see, though, here is not only a breakout on the absolute chart, but if you take a look here, look at the relative strength. This is Beacon Roofing relative to the Home Improvement Index. And you can see two key relative resistance areas. Well, actually, it's the same area, but it's been tested twice. I'd like to see a breakout. You want to trade a stock that is outperforming its peer group. And this one, you can see overall has been going lower. Same thing relative to the S&P, moving lower versus the S&P. It's got a couple of peaks here. I'd like to see it break out there. And then finally, home improvements. You can see a double top here on a relative chart when you compare it to the S&P 500. So the group needs to break out, and then we've got to see these relative breakouts on Beacon Roofing in addition to the absolute breakout. If I see an absolute breakout on light volume, but I'm still not seeing those relative strength charts improve, it's one I personally would just avoid because of that.
All righty. Let's see, there is a tie, so I will pick the one that we did recently look at because the only way we can look at it is if it's the most popular, and since it is one of the two, CRON, Kronos, in healthcare biotech, of course.
Yep, it's a cannabis stock. Definitely have talked about it. It's coming down testing the 20-day. After this huge move up, I would not be surprised to see some consolidation. The stock's been a great performer. I loved it on the breakout above 14. Talked about it, I think, just about the day it was breaking out right there. Mentioned that I thought it was one of the stronger cannabis stocks. It went on, had a really nice run. Unfortunately, I did not own it, but it made a big move without me. But right now, I'd say it's just kind of consolidating. I'd go up maybe to the top near 25, recent lows around 19 or so. And that's an area that I think you can trade. So pull back 20-day, you could certainly trade off of that. I'd probably keep a little powder dry in the event that we go down and test this 19 area. But that's where I would build a position. If it closes below 19, then I think you could be opening up a move a little bit steeper to the downside. So I'd watch 19. To the upside, though, I would expect this to make another run. Great volume trends. I think 25 could be in the cards here.
All right, excellent. The other most popular one, and believe it or not, we haven't looked at it in over a week, is Apple.
Yeah, we haven't looked at
just
Apple
get
in a
that
while.
20, well, for me in the EMAs anyway, 20-50-day EMA positive crossover. So IT trend model buy signal on this one.
Yeah, I mean, Apple computer hardware in general, I mean, they're moving up because the market's moving up. They're not moving up because they're showing any relative strength. And so that's my problem with Apple right now. If it makes a breakout here, it is trading better. I like the volume coming in here, breaking this downtrend. We've been holding above the rising 20-day moving average. So things are definitely improving. But one of the problems I have is that Apple, relative to its peers, for now 4 months in a row, continues to weaken. You can see Apple is wildly underperforming the S&P 500, and the group is underperforming the S&P 500. So since November, when the market started to really see a lot of selling, Apple's been a bad performer, and so it's improving. And I could make an argument that a breakout here would certainly be good. We might even have an uptrend with little cup. Maybe we get a handle back to the 170 area or so. But I think that there are a lot of better options in the market right now, at least until we start to see more relative strength from the stock.
All righty. Let's see. Next one up is for our friends in Canada, as I always like to say. Looks like BBD/B.TO, Bombardier, a transportation equipment industry.
All right. Yeah, nice breakout here. And you get this change of character, and that's what this is. This is what it looks like to me. I like to see that volume confirm. So I think you've got to move down. You really had almost like a little bit of a triangle here, which would have been setting up maybe for another push to the downside. But instead, we broke out to the upside. Now, it's a little overbought, and sometimes these stocks give head fakes. So I don't like to chase downtrending stocks that are starting to show good signs. I want to look where I can really minimize my risk in case I'm wrong on the stock. I think there are two key areas here, and it's going to be those two levels. This was the reaction high off of all the selling back in November, couldn't get through. Well, we did get through, and we did it on nice volume. So I think when you come back down, you're going to see some buyers step in around 255, 260. If that doesn't hold, then I think you've got a multiple tops here around 230 that we initially broke out on this big volume. So I think 260 down to 230. Those are the two key areas to watch on a pullback. But I think you do have a change in character on this chart, and I'd expect it to go higher from here.
All right, excellent. Let's see, the next one is Enphase, ENPH.
All right. Yeah, this has been a pretty good performer, just on both an absolute basis, also a relative basis. Love this pullback and test of the 20-day moving average. The false breakout here, though, with a negative divergence is a little concerning, especially if we were to go back down and maybe move into negative territory today. I would not like that false breakout with a negative divergence. Now, longer term down the road, I think you're fine. I just think if you do get a false breakout with a negative divergence, there's a support level you might see, and maybe even there. Because with a negative divergence, I look for the PPO to work its way back to the center line. A lot of times price will work its way back to the 50-day moving average. We've already had a huge run up here. Just in 2019, this stock has gone up probably 70%, something like that. So pulling back for a period of time wouldn't be a horrible thing. And I would just keep a real close eye on that candle right there. I would, just a little warning, something to remind me. But if we get a reversal there, if that candle doesn't look good at the end of the day, I personally, if I was in it as a short-term trader, I would sell it.
All righty, let's see. Next one. We haven't looked at it in a week. Etsy.
Yeah, I mentioned this one at the top of the show. This is one that reports tonight. So they do have their earnings coming out after the close. It does have a tendency to move up with earnings. We've seen that in the past, and it is trying to make this breakout. The problem I have is its peer group has not been good. So as I mentioned earlier, this is one of the strongest stocks within its group, but I don't know if that's going to be enough with earnings or not. It has been a great performer, and like I said, its history is to gap up with earnings. So my gut feeling is that we see higher prices and a good report here. But as always, I'm going to be a little cautious because of the overall relative weakness of its peer group.
All right, let's see. Next one is the oil and gas exploration ETF IEO.
Yeah, I would personally stay away. I mean, we're just so far still from the highs back in October. So the relative strength is poor. We already went below the 20-day once. We're testing it now. If I were to get, in order to get a little bit more excited, I think I'd have to get through 60 on a closing basis. And then you can see, I mean, I could just stack these levels up as you go up the ladder here. Here you got a reaction high. Here's a reaction high. Here was a breakdown of a prior support level. So it's just going to be one step after another. The market's not far away from an all-time high, but IEO and many of these oil and gas exploration and production ETFs and stocks have really not performed well on a relative basis. The stock is sitting about where it was 6 weeks ago while the market's continued moving higher. So you just have to understand you've got a relative laggard here. I think there's a lot of overhead resistance. I would avoid it.
All righty, sounds good. Next one up is JB Hunt, which is JBHT.
Yeah, this one I also had mentioned earlier. I own it. I bought it on the 20-day. It's sitting right on that 20-day now. I like it because I can keep my stop really tight. But the breakout occurred. First of all, you had the gap up from 100 up to about 108, pulled back, nearly filled that gap, and then broke out above this 108 level. And so you can see you've got pretty good support right at about where the 20-day is. When we had the gap down in second week of February here, it did manage to hold this level. You can see a hammer print at this level. So I would expect the buyers to come in here. If they don't, this hasn't been a great relative performer. So I will have a very tight leash on it. I would say a close below 107.50, and I would definitely be out of the stock.
All righty. Sounds like a plan. The next one I have up for you is PLG. And let's see, where is this one? This is a materials, non-ferrous metals.
All right. Well, first off, volume's been greater lately, but you can see a number of days here where it's well below 100,000 shares a day. So this is not the kind of stock I would be interested in because I just like liquidity. I want to make sure that the stocks I own are liquid. But it does look like it's broken its downtrend. So just looking at it from a technical perspective, on the breakout, what you want to see is confirming volume. So you want to see volume picking up. And I think we got that here on the breakout, and we certainly have gotten it these last couple of days. You've got a momentum stock here that a lot of traders are probably jumping on. And so what I would say is that short term, you've got resistance up close to $2. Maybe you can pull it all the way up to $2. And I think you're going to have support probably at about this latest breakout at about 155. So we're sitting right in the middle. So will we hit $2 first, or will we go down and test 155 first? I'm not sure. And again, with the illiquidity of it, I wouldn't trade it. But I do think on this move, I would not be shocked if we looked at this tomorrow that it could be at $2 just based on its momentum.
Wow. Okay. One more to go, and it is in telecom equipment. GoGo. Geo.
Yeah, GoGo I owned back over here at some point, and then it went to the downside. It's trying to strengthen a little bit. I'm going to pull this up on a relative chart because it's not been a very good relative performer. I mean, you can see the telecom group as a whole breaking out to new highs, and look at what this stock is doing. It's gone up because a rising tide lifts all boats, but it has not been a very good performer on a relative basis. So what would need to happen for me to be interested here? I would need to see volume coming in and a breakout. So I think we had some support coming in here at about 4.25, and you can see all of the failures at 4.25. So if I could see the stock get up to 430, 440, 450, and see a big volume bar come in, that would begin to tell me maybe we're seeing some accumulation. Until then, I'd pass.
All right. And that does complete the 10 and 10 to 1. And here are the symbols we just went over. I will have those up in the Market Watchers Live chart list. Just go to the Market Watchers Live blog. Link is right there at the top. You can then copy and use those symbols and the way that Tom annotated them by copying them to your own chart lists. All right, time for our final market update. And let us see what is going on in the markets right now. Kind of interesting out here, Tom. Let's see what we got here. All right, so at this point, you've got the Dow and the S&P and the NASDAQ. They all hit intraday highs, and they are all now pulling back. Of course, the news was that trade talks are going fairly well, I guess. So the markets must have liked that, but I think the euphoria is already being lost. S&P 400 is almost down to Friday's close, as well as the Russell 2000. And you can see that the Canadian markets, the TSX, also hit an intraday high and has pulled back to what I would say is gap support here. TNX Treasury yields 2.677% up, and we can see that the volatility index is starting to rise, but we are still looking at very low readings below 15, currently at 14.18. UUP unchanged currently. GLD started the day higher, but has been making its way lower all day long, and now we are in negative territory. GLD is down 21 cents, and we can see that USO big gap down, and then a move that continued down to the 1150 area for USO. But does look like it might have found support here, but boy, doesn't that look like a reverse flag, which is a continuation pattern, meaning lower prices. All right, TLT, big gap down, but consolidating sideways, currently down 47 cents. And then here's a quick peek at our sector summary. Financials and industrials and materials. So you guys were very interested in industrials and materials for the 10 and 10. They are doing fairly well. Both of them up almost 0.75%, but the financial sector clearly the winner, up 1.15%. And I'm going to pass it back to you, Tom.
Okay. Yeah, I wanted to just take a quick look at a chart that I had in my blog article this morning. So bear with me. So here was my chart or my article. And the chart I wanted to show you was under the current outlook area. I pointed out, first of all, the S&P had bounced 19% off of that December low to where we stood on Friday. And I went in and looked at the relative strength of the aggressive areas of the market. And so when we, the last three break it down segments, I did two of them. I did industrials and I did consumer discretionary. And then we had Julius on the show last week, and he joined me to break down the technology group. The reason those are the three that we picked so far, as you can see, relative strength on consumer discretionary, technology, and down here on industrials. These are the three areas that are really getting the money during this move back off of the December low. When you look at communication services, February's been horrible. We're actually down a little bit from where we started the year, and financials essentially the same thing. Of course, financials have been hurt for the most part by that declining 10-year Treasury yield. So I just wanted to point out these are the three areas that have been seeing that relative strength. And consumer discretionary actually broke to a new relative high at the beginning of the year, which is pretty impressive when you look at where all the others were relative to their earlier relative highs versus the S&P 500. So this is why I'm so bullish on consumer discretionary, because that's where the money's been going. Now, yes, it's been weak for the, kind of rotating a little bit the last 4 or 5 weeks. But I think, again, when you see this kind of outperformance, you're going to have profit taking for a period of time. But as you see that profit taking and we see a little bit of relative weakness, I believe it sets up for some opportunities going forward. And that's what I had. So I know you've got your sentiment, Erin. So what does that look like this week?
All right, let's take a peek. A little bit mixed, I must say. All right, let's go right here. Okay, here we go. Here is our decision point sentiment update for February 25th, 2019. I will be going over the put-call ratio. I'll also be looking at the American Association of Individual Investors poll. We also will look at the National Association of Active Investment Managers. We'll be looking at specifically what kind of exposure they have to the market right now. RIDEX ratio helps us determine money flows. And the Wall Street Sentiment Survey is a poll that market timers take once a week, and we'll see where they stand. And then finally, I will finish up with the VIX and look at some breadth, and then gold sentiment, which we track using the discounts and premiums for Sprott Physical Gold Trust. So I just wanted to go over, make sure it's perfectly clear what we're getting ready to look at. All right, so we're going to start with the put-call ratio at this point. It's really been hesitating and not doing a whole lot, but we are still trending higher right now, especially when you look at the equity put-call ratio. Now, these scales are inverted, so when you see very, very low readings, that tells you that you've got, since we're inverting it, that you're getting very bearish readings, because this will get very, very big. And since on the inverted scale, it is in the denominator, that will make your readings smaller. And so I like to look at it as overbought and oversold. So when people are very bearish on the put-call ratio, I want to see those readings near the top. So right now we are seeing a rising trend. And they aren't really at the top of their zone that they could be at as far as bearishness. But we are getting overbought. And so that does concern me. As soon as we start to make that turn, that's when we need to be concerned. But I want to see a real turn like we've seen on these. Right now, we just have all this hesitation. I've marked these two areas because I thought that they best resemble this jagged, twitchy move to the upside on the put-call ratios. And, when I saw that, they did tend to come before declines. But I think a lot of that, too, is you get overbought on this ratio, and then, you're going to see a move to the downside. We are near the top, but it could get higher. We could see more bearishness here. So I'm looking at this one as pretty much neutral to bearish. Next up is our AAII investor sentiment. This is just a poll, so people can go there, everyday people, and take the poll. And this tells us whether they're bulls or bears or neutral. And what I found interesting about this chart, first of all, was the elevated bull-bear ratio. And again, when we're looking at this, the higher the numerator is, meaning the more bulls we have, the higher this ratio will go. And when we start to see a preponderance, a very large portion of the pollees on the bullish side, sentiment is contrarian. When everybody's a bull, that's when you should start looking for a reversal. And as of last week, Friday, that's when we post these, we had a bull bear ratio that was over 1.5. it's really overbought when you hit 2. So it could certainly go higher. One of the things I do note as well is that, we still are looking about, more than, let's see, we've got 40 and 65%. We're still looking at about 35% of polies sitting in neutral. So there isn't a whole lot of conviction on their bullishness at this point, in my opinion. So I would look for this ratio to move even higher. But technically, this would be, I would say, considered bearish for the market, because we are seeing more bulls than we are seeing bears, and that ratio is elevated right now. But I like to pay attention to how many people are neutral, because I think that does give you a sense of, where everybody is, what they're feeling, because that's what these sentiment indicators do. And I think it's interesting to see how many people are confused and don't have an opinion. So when people all have conviction about what they think on one side or the other, that's when the numbers get especially interesting. All right, so for the name exposure right now, it looks like a double reading here, but it just does that because of the way the chart's set up. But the reading for this week is 77.85 as far as exposure goes. It is an elevated reading, because you can see here it's higher than a lot of the readings that we've had previously, but it's not as exposed as we could see, as we have seen. But the fact that we are seeing a little bit of pullback in exposure, it's still high though, in my opinion. We're still at 77.85. I think that's pretty high. So that still would be, so a high reading would be considered bearish for the market, because that means if money managers are highly exposed to the market, that means they're feeling very bullish. But they have pulled back exposure somewhat. So I would say that we have to temper what we're seeing here by the fact that we are getting these readings starting to move a little bit lower. Money managers are pulling back slightly. They're getting a little more cautious, even as we see these very large percentage moves over the week. All right, let's take a look at the Wall Street Sentiment Survey. I'm going to look at that one now. And you have the survey available to you right now. The question is whether you're basically a bull or a bear for the week. I didn't get I didn't get the help of seeing what happened today before I made my decision last Friday. But my decision last Friday was I was a bear. And I think when I sent my email, I said, okay, maybe this week I'll be right. So it's been very difficult to be in the bear camp when you look at rallies, the strength that we've had. And I have to say, if we can get above this level here, this is the SPY. If we can get above that 280 level with a decisive breakout, meaning a 3% move to the upside past this, I will have to move for sure back to the bull market camp. But for now, I still think we're vulnerable, so I want to remain in that bearish camp, so to speak. So as you can see, as far as the market timers go, we're completely split in half. 43% are at a bull and 43% are a bear. Now, interestingly, as far as market timers goes, we're only looking at about 14% neutral. So we're starting to see some conviction. The only problem is it's perfectly even on both sides. So at this point, what you want to see on these ratios, like I said, is a reading of 2. That means you have twice as many bulls as you have bears. So that's really where we're trying to get. So seeing them split perfectly in half, that's neutral for the market this week. So we might both be right. Okay, let's go ahead and look at the RIDEX ratio. I love this chart because this is the actual money. This is not, how I feel. This is what investors are actually doing with their money. It's real easy to say I am a bull, but then if you go out and buy a bunch of, if you put all your money in cash and start buying bear funds, you're really not bullish. So this is very good information to be able to look at to determine where the money is actually going. So here's how it works. Ridex is a group of funds that we track, including the money market funds, and they're run by Guggenheim, and they every night will report to us how many assets are in their bear funds, how many assets are in their money market funds, and how many assets are in their bull and sector funds. And by tracking that, we can see where the money is going. And that's what we want to look for. And this one, I think it was very clear this week. We're continuing to see money come out of cash. So despite the poll saying that there are a lot of neutral people out there, they're not they're not moving to cash. They're taking their cash out, and they are selling bear funds. So that we're looking at very bullish activity here. So I find it interesting that we had so many neutral votes on AAII, but when you start looking and digging down into the information, you can see that we're looking at very bullish activity, because we're getting the increase in the bull funds and the decline in the money market and the bear funds. So at this point, I'm watching this ratio. It's getting close to its overbought area here, but really the main thing I just want to point out is the fact that we're looking more bullish in terms of where the money is going. All right, and just two more quickly here. We're going to look at let's look at the VIX and see what's going on here with the VIX and breadth. You know, the VIX has been staying above its average. Now, of course, I invert the scale again, because in terms of sentiment, low readings mean bullish. High and high readings mean bearish. So what I want to see is when you get these moves to the penetration of these Bollinger Bands. So I invert it for sentiment reasons. And so the fact that we have low readings, or the VIX is above its moving average on this scale, that tells me that we're looking at very strong market, of course. And as far as breadth, we're getting some climactic readings here on the advanced declines, and a little bit here on the issues advancing, but I'm not seeing clear climactic moves right now. I would just say that I'm still looking at a rising wedge, and that is bearish. Like I said, I think we're in the process right now of trading above 2,800. But I need to see a solid breakout to the upside, meaning a decisive or 3% move to the upside past there. At this point, the chart pattern and the sentiment is telling me we're going to come back down lower. And finally, we'll look at the gold sentiment chart. And like I said, we track discounts and premiums on the Sprott Physical Gold Trust. If you have discounts going on, that means that overall people on gold are bearish. We've seen obviously a lot higher discount rates, but it's still, as far as a normal range goes, it's still rather elevated, and bearish sentiment is good for gold. And so I like that, but these declining tops on the PMO and these very high rising price tops does concern me right now. I still think we're going to make a move to test overhead resistance, though, for GLD. All right. And that is all I had for the sentiment report. Let's go ahead and look at our summary. All right, so remember, put-call ratio, overbought, but it's hesitating in its rise. I think that it's neutral for the market because it isn't turning down, which would be bearish for the market. It's rising, so I have to kind of keep that, but it's hesitating, so I went neutral as far as that goes. AAII, elevated bull-bear ratio. It's bearish for the market, but remember, a lot of neutral feeling out there. Name active exposure for active money managers is elevated, and it declined somewhat and is continuing to decline a little bit. So I think that this is somewhat bearish for the market right now. They're pulling back their exposure, but we're still seeing it as fairly elevated. Wall Street sentiment, timers are split pretty evenly right now, but they are showing some conviction, but that is clearly neutral for the market when you have a pair of readings that are the same. RIDEX ratio, where's the money? Declining out of the cash and bear funds, increasing in the bull funds, meaning bullish sentiment, which is bearish for the market. Breadth and VIX, we've been trading as far as the VIX at the top of the Bollinger Band, which means you've got strong market internal strength. However, being so close to the top of the Bollinger Band, it does leave us vulnerable to a downside move. Breadth is elevated, somewhat climactic. I'm looking at that as neutral to bearish for the market. And finally, gold sentiment discounts are elevated. Those PMO negative divergences. I just have to say that I'm neutral for gold right now, but I still, in the very short term, am expecting a move to the upside. And that's all I have for the sentiment update. So let's wrap this all up, Tom. I did have a bunch of questions. Oh, here is our poll first. We'll look at that poll. Like I said, I think you guys have the benefit of seeing the market move today. You get a little cheat in there. It's hard to go in lower for the week when you already have a 0.5% move to the upside on a Monday. But I did vote lower on Friday. I keep thinking eventually we're going to start seeing a pullback here, correction. I don't know, Tom. I'm starting to really wonder.
Yeah, I think that obviously the market took a hit in the fourth quarter, thinking that the economy was going to slow. We had all these issues with the trade war, the government shutdown. I mean, there were a lot of things going on. The government shutdown's been resolved. The market is now hearing a lot of positives about the trade war, and we're kind of sitting now back where we were before all these concerns, kind of were, right in the spotlight. So I've said before, I don't think we're going back down, not to the December lows. I think that we've resolved a lot of issues I think the market was worried about. I think there's some truth to the fact that there were a lot of market participants on vacation back in December, and so volumes weren't as heavy, so the selling really overdid things to some extent. I think there are a number of reasons for it, but I do agree with you. I mean, I think we're very overbought. We're at some key areas of resistance on the charts where a pullback would actually be a good thing. Even from a bullish perspective, I think it would be a good thing to consolidate the gains that we've made off of the December lows, but I don't know. I think we go higher. I think we've gotten past now the worst part of the calendar month historically. I think the market will be looking forward to new money coming in March. And so I think a week from now, we're going to be higher.
All right. We'll have to see how we do. We had a few questions for you in the room today, if you don't mind answering a couple, because I think they're pretty quick.
Okay.
Why don't you use a 200-day simple moving average on your relative chart style?
Well, keep in mind, I'm a short-term trader. I'm a short-term momentum trader. And so I'm going to need to see stocks bouncing off of short-term moving averages, not long-term moving averages. I mean, by the time a stock hits a long-term moving average, I have no interest in it. I've pulled up Trade Desk as an example here. So I've added the red line, which is the 200-day moving average. Now, I'm a trader that if I like a stock and it's trending higher, I want to try and grab it on the 20-day test. If we get a negative divergence, maybe on a pullback to the 50-day. But if a stock breaks down and gets all the way down to the 200-day, it's probably off my list. I'm not even interested in it anymore. So anyhow, I don't know if we'll have time for any more today, but I can answer some others tomorrow.
Absolutely great.
All right. Well, let's go ahead and we will wrap it up. I certainly appreciate everybody joining us. Of course, Erin and I have our Monday setups on the line again for another week. We'll see what happens there. And you've got your upcoming schedule on your screen. Again, thanks to all of you for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and we will see you back here tomorrow. Happy trading.